We're doing a series on different asset classes, and today we're going to get into gold, right? Look at all this gold here, and talking about diversifying and 3 different ways to diversify using gold as an asset class in your portfolio. So in the video today, we're going to get into 3 different ways that people commonly will own gold. And we're going to talk about the pros and cons of each of them. I'll give you some thoughts that I have around that and really get into how you can use this in your own portfolio. So let's get into gold as an asset class, right? According to US News, commodities is a very common type of asset class, gold being perhaps the most effective commodity of all. It's not just for doomsday preppers. Gold can and should be a valuable part of a diversified investment portfolio that can help you expand into other asset classes. Now let's talk about this, right? Why is gold one of the most efficient asset classes, or why is it, held in such high regard? Gold's been around for a really, really long time, and it's always been a consistent store of value, right? People have placed a value on gold and they hold on to that, and assuming that value goes up and up and up because there's a finite amount that is available. So the more that you have and the less that other people have, it creates this demand, which usually will increase the price of what gold is worth. And before we talk about the different ways to own gold in a portfolio, let's really talk about what a commodity is, right? Because gold is a commodity. So if we look at Investopedia, they say that a commodity is a basic good used in commerce that is interchangeable with other goods of the same type. The quality of given commodities may differ slightly, but it's essentially uniform across producers. When they are traded on an exchange, commodities meet a specified minimum standard, also known as a basic grade. So think about oil, right? Because that's a commodity, right? Gold is a commodity. Oil has a different use, right? It's used all the time in all different types of products, down from plastic bottles to the gasoline that's put in your car. Each of those different types of oils have a specific grade on it. The same thing happens with gold. This is to measure the quality of the product that you have or own. So if you're a doomsday prepper, right, you're looking for a safe haven. And why are people attracted to gold? Well, in times of scarcity, or times when things feel like they're falling apart, right now as we film this, the S&P 500's down close to 20% for the year, right? The NASDAQ is down over 30% for the year. So imagine having these portfolios, looking at these statements, and the value keeps going down and down and down, right? If you're looking at a safe haven, and let's look at what US News says about gold, gold is an excellent hedge against not just inflation, which, by the way, today we have about 8.5% inflation. We're at over 40-year highs on inflation today. But catastrophic financial market failure. Gold is first and foremost money that cannot be printed or debased, is therefore isolates its owners from a negative outcome historically associated with paper currencies. So that's what we're seeing. Historically, people feel that gold holds its value because, like I talked about before, there's a finite amount of gold. It has to be mined out of the earth, and it's very difficult. It's not like just going to the Federal Reserve and they just keep an endless printing press of dollars coming out. You're probably seeing it today, right? On the television commercials, getting flooded or bombarded by people talking about gold coins, silver coins, right? Those are other types of commodities out there, different precious metals, and everybody wants you to buy coin. For the average small investor, they often invest in gold through physically buying coins like maple leaves, American eagles. There's something nice about having gold coins in your sock drawer or in a safe. I don't know about that, right? I mean, if we're being honest, gold coins, they look really nice. They do have some value to them, but does everybody that you would interact with, do they all understand the value of those coins? So is it an easy medium to exchange, right? Like if I take out a dollar bill or a $5 bill, we know what that's worth. do you know what a gold coin is worth, right? Or does the person you're trying to purchase something through understand the value of that gold coin? So it's something to really consider as to how much value these really will hold for you. So maybe a more efficient way for you to own gold, especially inside of a portfolio, might be through an ETF, right? And what is an ETF but an exchange traded fund? So let's talk a little bit about what this is and how it works, right? So according to US News, an exchange traded fund that operates much like a mutual fund, there are many gold specific ETFs such as Spider Gold Trust or iShares Gold Trust. And with the ETFs, investors can buy as little as a single share in a cost-effective, low annual expense fund. So again, what happens here with ETFs is you're not owning the physical gold. You're owning an ETF, which is traded on the value of that gold. So inside of a portfolio for lesser cost, right, because you don't have to hold the physical gold in your hand, you can trade it in and out on a daily basis whenever you want, however you want. So it gives you a little more flexibility around the ownership, and you're trading it back for what? For US dollars. The third way we can look at is actually owning individual stocks of mining companies that mine gold, right? And you want to be really careful around what you're investing in and what those companies do. So buying shares of companies that mine gold is another alternative. These stocks can represent exposure to gold through their returns can sometimes underperform, right? This includes mining companies such as Eldorado Gold, Yamana Gold, Barrick Gold. I don't know these individual companies. I don't know their performance, but I can tell you a story. It's one of the things that got me into this was buying into a penny stock that was a mining company in Nevada. They were going to mine gold and were going to make fortunes, millions of dollars, right, from a small investment. Guess what happened? That company went belly up. So if you're investing in an individual stock, you need to make sure that whoever you're purchasing it through, or if you're buying it on your own, that the due diligence on that has been done so you understand what exactly you're investing in. So we just went through a lot of education around the common ways that people will own gold inside of a portfolio. I think the more important piece to understand is why do you own these, right? What is it inside of your philosophy or your economic situation that makes you want to own gold? And is that the most efficient vehicle to help you get there? One of the things you can do is click in the link below, have a conversation with one of the Epic strategists. They'll be able to walk you through our success process, get to know you better, and help you understand the wide variety of different financial products that are available to you out there. Thank you for staying with me through this video. What I would say is you want to be careful of the people selling gold to you on the television, right? Let's have a more thoughtful approach on this. If you enjoyed this video, go ahead, give it a like, hit that subscribe button and ring the bell. That way you get notifications every single day as we put out new content.